Welcome to the Stock Market Trading System video course here on YouTube, where you are going to learn how to trade single call and put options on the SPY ETF. My name is Eric, and in this video, you're going to learn the core theory of this trading system, which is the MOBO Bands indicator. But before we get started, you need to know that this presentation and anything on this channel is for informational purposes only and should not be taken as investment advice. Options trading may not be suitable for all investors as it can involve a large amount of risk. And I am not an investment advisor of any kind. Additionally, past performance of any strategy, including this one, is not indicative of future results. Now, before we dive into the MOBO Bands indicator themselves, I want to talk a little bit about technical analysis and some of the challenges or some of the problems you're going to face with any system, whether or not you choose to deploy this system into your own trading or not. When you're using technical analysis, it's often kind of a challenge to determine if a signal or buy or sell signal you're getting, is it a real move or is it just kind of a noisy chop, right? So every day when you're in the market and you're looking to take one of those trades, the goal of the trade is to get a momentum move in whatever direction you're trading, long or short. You want to catch a move in that direction so that you can make money, obviously. So catching that move and knowing when to go long or when to go short is really important if you're an option trader, because if you're buying calls or puts, you know that time decay is against you. We're going to talk later in the series about what options you want to look at, but when you're going directional and you buy a call option and the market doesn't move in your favor quick enough, you start losing money. It's not like buying stock where you can just sit in it for a few days or a week and not do anything, and it's not really that big of a deal. So it's really important that if you're going to buy options on a directional move based on technical analysis, that you're kind of avoiding the noise. And this is where the MOBO bands come in. They're really one of the best ways to help directional option traders know when to get in and get out and kind of eliminate some of that noise. So let's talk real quick about market noise. I'm going to go back to a little bit of history. I'm not going to get too in the weeds here on market noise theory, but there was a French mathematician, a long time ago, back in the 1800s, named Louis Bachelet. Hopefully, I didn't say that wrong. And he was the first one to model what's called Brownian motion, and Brownian motion refers to kind of a random motion. Feel free to Google that. You can dive down a rabbit hole. Go deep with that, but he was one of the first ones to model Brownian motion, and what these guys were doing back then was trying to apply this random motion for modeling price movements in the financial markets, right? So this random noise or motion in the market is what really defines what they call the normal behavior of the market. And so what they discovered is the move, when you have a zone of noise, random noise, when you get a move outside of that zone, that often identifies a trend move or a large price spikes. And that's where the MOBO bands are going to come in. They're going to help us identify that zone of noise. And typically those trend moves and large spikes are kind of what we're after. That's a momentum breakout. It's breaking out of the noise or the chop that you don't want to be in if you're holding options, especially if you've bought them, right? So this leads into the MOBO bands. So what are MOBO bands? MOBO bands stands for Momentum Breakout Bands. We want to look for a momentum breakout out of the noise or out of the chop. And really what they are is a modified Bollinger Band. So just kind of a quick basic understanding of these things. Bollinger Bands, you probably have heard of them. They're on every platform there is. Bollinger Bands are based on a zone, I'm just going to use the word zone, of 2 standard deviations using a 20-period look back. That's the default. And we'll look at a chart here in a second. That zone that it creates as a 20-period look back, it's like a 20-day moving average or 20-period moving average. And there's a 2 standard deviation band above and a 2 standard deviation below. And the idea is that 95% with standard deviations is going to be inside those bands, right? So MOBO bands are a little bit different. They're based on a smaller zone. The guys who came up with this, they use 0.8 standard deviations with a 10-period look back. So it's a narrower band with a shorter look back. And this zone is thought to contain 42% of all the price action. So that is the normal behavior of the market, is to sort of trade inside this band. And then when you get a move outside of the band, that's when you look to capitalize on a price move or trend change or whatnot. So when the price breaks out of the MOBO bands or the random noise zone, this can signify a trend move or price spike, and that might be something that's going to be worth trading. We're going to get way more detail later in the series, but let's take a quick look at these. Here is a picture of the SPY with the standard Bollinger Bands, and you can see that that blue line in the middle is the 20-period moving average. There's 2 standard deviations above, 2 standard deviations below. The bands contract and they narrow in, and then big move comes. But the key here is you still see that, most of the price action. I see maybe 1 or 2 candles that maybe close outside of the bands. Most of the price action here, 95% or so, is going to be inside those bands. So now let's take a look at the same chart with the MOBO bands. The MOBO bands, as I mentioned, are going to be narrower. They have a shorter look back period. The standard deviation is set to 0.8 and negative 0.8. And you can see on the chart that a lot of the time the price is trading outside the band. And typically when it goes outside the band to the upside, for example, you're going to get a nice little trend move to the upside. And this is where you want to capitalize with a call option, getting that move to the upside. When the market moves to the downside, that's when you could look to potentially do a short trade with a put option. But again, when it's kind of chopping around in the middle, you just kind of want to, not be in the market, because you don't really know which way it's going to break. We're going to talk later in the series about how to determine that. But in general, the MOBO bands are here to say, okay, if you're breaking above the bands or outside the bands, that can signify a trend move or a price spike, and that's when you could potentially take a trade based off of that. So again, real quick, if you don't have the MOBO bands in Thinkorswim, that's okay. You can still use a modified Bollinger Bands. I'm just going to highlight it here again. By changing the Bollinger Bands to a 10-period look back with a standard deviation of 0.8 and negative 0.8, whichever platform you're using, that's going to get you the exact same MOBO zone that you saw in this chart. Now, it may not be colored the same way, but that's okay. You just need to know where the bands are, and that modified Bollinger Band is going to be able to get you there. Now, in the description of this video on YouTube, I've put a link so you can download the Market Timing Strategy Guide. So feel free to check that out and grab a copy of that. The Market Timing Strategy Guide, it's a 10 or 11-page PDF that shows you exactly how to use the MOBO bands. We kind of just barely touched it, just kind of saw what they look like. But the strategy guide goes through the entire strategy. It's kind of nutshell stuff. So. And before you go, be sure to like, share, and subscribe to the channel. I'm just getting started with this series. If you don't want to miss any of the videos in this stock market trading system series, be sure to click that little bell notification so that you'll get notified when the next video is placed. And you can also consider becoming a spider trader over on the website, and you see the link there. So that's it for this video. Stay tuned for the next video, and I'll see you then. Thanks.